I'm Todd Poor. I work with TD Realty. Tanika Donnell, she's an awesome lady. I was top producer in July out of 300 plus agents. Thousands of homes sold together. We serve all of DFW. We do study each and every area. I have clients all over the place. I'm always studying Collin County in Dallas and but everywhere really. Could someone mute, please? And then my transaction coordinator, Nicole, she basically takes care of all my paperwork. She's been doing it for over 10 years. And so if we're about to put in an offer at a house and he says, oh, well, the deadline's in 2 hours, it's hard to go back home and write up the contracts and get them signed in 2 hours. So I just tell her what we want on the contract. She shoots it over to you guys. You can read it, the whole thing. You don't have time to read it and sign it. You can sign it on your cell phone. She makes things a lot easier, and she double checks everything that I do. So we know there's not going to be any mistakes. And then Blake, my senior loan officer, he's online. He's my co-host. You gonna say hi, Blake?
Hello, everybody. Glad to be here.
Okay, yeah. If you guys want to ask questions in the chat and book a one-on-one call at toddpoorrealty.com/book, I'd love to go over, you know, if you're getting started, if you're halfway through, if you're using your aunt that just started real estate as a realtor, I can still help you, help you answer questions and things like that. Which would be a bad idea, though, just to let you know. If you want to talk to Blake, book a call and I'll switch you over to Blake. I have only 5-star reviews on every platform. Kristen, she's a huge fan of Blake and I. Let's see, he made the whole process fun and easier than expected. He's so down to earth that you feel like you've known him forever. And then Blake is absolutely the best. She's a huge fan. She sends cookies and all kinds of stuff all the time. And, I send her stuff too. They cooked me dinner about a month ago, and they're just, really good clients. I get really close to all my clients usually, even though I don't seem like a big outgoing guy right now. What are the steps to home ownership? Once again, schedule a mortgage planning session with our senior loan officer. Book your session here with expert Blake Albertson at toddpoorrealty.com/book. Second step is getting pre-approved. You want to take it from here, Blake?
Yes. So thank you for all your kind words. I do appreciate that very much, Todd. And it's a pleasure working with you too. We do make a great team. So like you said, man, the first step is schedule a mortgage planning session with me. toddpoorrealty.com/book. Talk to Todd. He can get the details of your goals and what you're looking for, and start kind of picking out housing for you. And he'll send you over to me, and we'll get you pre-approved. So we get you pre-approved, and during that pre-approval process, I look into the first-time home buyer incentive programs for a qualification for you on that. If we can get you some down payment assistance, we're definitely going to do that. It just helps in the long run. So we get you pre-approved. We get you submitted for the first-time home buyer incentive programs, and then you get to go meet back up with Todd and go house hunt. And that's the fun stuff, where you get to go look at all the nooks and crannies of every little house and figure out exactly what you like about houses, where you want the master bedroom, or how big of a backyard, and this, that, and the other. Once you find that perfect house for you and you want to submit the offer, you get with Todd. He's going to go with me. I'm going to give him a letter saying that they are good to go on their financing, and you're going to submit the offer, and then you will negotiate terms. Todd will negotiate terms for you with the other realtor, and then you go under contract. Once you get out of contract, there's closing date. We work on the sales price and who pays what. And like Todd said, with this buyer's market, we can get the seller to pay like some title fees and different things. So we go into contract, and that's when the work really starts. So leading up to that point, we do as much as we can with as many documents and getting all that together. So we get out of contract, and then it's about 30 days, and we finalize the financing. You close on your dream home, and you get to move in. And then last but not least, you get to enjoy your life after making a great investment. It sounds like a lot of steps, but trust me, it is so worth it. So mistake number one, ignoring first-time home buyer incentive programs. The state wants to give you money to help you buy a home. You might as well utilize that. So what is a first-time home buyer grant? Well, it's a grant, and they are specific to each county. And each county has an income limit and a purchase limit. So depending on your income is going to depend on whether or not you qualify for that grant. So it does come in the form of a grant or a forgivable second mortgage. So what a second mortgage does is you've got your main mortgage to buy the home, and then you've got a tiny little second mortgage that you pay off afterwards. Well, this one's forgivable, and it's forgivable if you stay in the home for up to 3 years. If you stay in the home, don't sell or refinance within those first 3 years, you don't have to pay that money back. So it's kind of like a grant. You just got to live there for 3 years. And that is all under the down payment assistance programs that we have. So here's an example. Anita wants to buy a home. The purchase price of the home is $300,000, and I got her approved on an FHA for the $300,000. The minimum down payment on an FHA we talked about earlier is 3.5%, which is $10,500. Now, the FHA upfront mortgage insurance cost is 1.75%. So that brings the total loan amount to $294,566. That incentive is 5% of the total loan amount, comes out to $14,728. Now, the total down payment is covered by the incentive, and that also leaves us $4,228 left over for closing costs. That could be escrows, title fees, origination fees, anything in there that's going to need to be paid at closing. So that helps out tremendously.
Hey, Blake.
Yes.
You were saying FHA upfront mortgage insurance cost is 1.75% of the total loan amount. Are you saying that rolls into the loan? Like it's
Yes,
not an
yes,
upfront cost?
Absolutely. So you can pay that at closing. Great question. You can pay that at closing, or we can roll that upfront mortgage insurance cost into the loan. And on this one, that's actually what I did with the total loan amount. So it makes it a little bit easier at the end, so you don't have to come out of pocket as much. So it's really beneficial that we can do that. But yeah, absolutely. So we've got 4 different types of mortgages. We've got conventional, which fall under Fannie Mae and Freddie Mac. Now I'm sure everybody's heard of Fannie Mae and Freddie Mac, right? Who's heard of Fannie Mae and Freddie Mac? Well, if you have or haven't, they are Brittany Myers worked for them. Okay, so you definitely know. Yeah. All right, a couple of you have heard of them. I like it. So they are the government-backed entities that create the guidelines for conventional loans. They say your loan has to fit in this nice little box under these guidelines to be a conventional loan. So that is a conventional loan. Fannie Mae and Freddie Mac. Number two is FHA, which we just spoke about that. Now that's a government insured loan. That's why there's the upfront mortgage insurance that's what you're paying for, is the mortgage insurance upfront on there. Now there's a monthly mortgage insurance included in that as well. The government is insuring that, so they want to make sure they get paid for that. The USDA is also a government insured loan, and it is area specific. So it is specifically for rural areas. It's originally designed to help rural areas grow. So there's no down payment with the USDA. There is the upfront mortgage insurance, but there's no down payment other than that. There are closing costs involved, but that's a really great program if we can get you into that. And then number four is a VA loan. Do we have any veterans in this meeting with us? Well, a VA loan is a great deal for veterans. They do deserve it. Now it's only for qualified veterans in active duty military. Again, this one is no down payment. There is an upfront VA charge for that because it is a government loan, but it's a great deal. It's a really great deal for our veterans. Now, keep in mind with these, the guidelines may vary depending on the lenders. Some underwriters want certain things than other lenders can. Usually bigger banks have a lot more requirements than, like, say, a brokerage like myself. Speaking of loan requirements, here is a list of documents that we will need for the pre-approval process. And these will also vary depending on the program, but this is the general list that we give everybody. We do need your driver's license or identification card, a social security card. So those are two forms of ID that we need from you. We need your residential history, your addresses for the past 2 years. We will need to verify your income. So we need the name and address of your employers for the past 2 years, 2 months worth of pay stubs and bank statements from which the earnest money and cash to close will come from. We also need W-2s for the past 2 years. For self-employed people, we will need copies of the 2 most recent years of tax returns. On that. That's how we calculate your income there for self-employed people. Any additional income paperwork like child support, Social Security, retirement, insurance checks, stuff like that, we will need to see that as well if we do need to count that income. Sometimes we don't. And then a list of any assets like rental property, anything that is generating income or you have to pay on each month. So Federal Housing Administration loan, the FHA loan provides mortgage insurance on loans made by FHA approved lenders throughout the USA. So how do the first-time homebuyer programs work? I use them in tandem a lot with FHA loans for the down payment assistance, but we can use them also with Freddie Mac and Fannie Mae. Absolutely. Freddie Mac and Fannie Mae have their Home Ready and Home Possible programs in there as well. So benefits of an FHA loan. It's a low 3.5% down payment with a 580 score and a credit score as low as 500 with 10% down. Now, keep in mind, these scores are absolute rock bottom. We can get it done. We can get the loan done with these scores, but it will be so much more cost effective for you as a buyer if we can get you to the 640 range. 640 and above is a very affordable loan. Of course, we want everyone in the 700s, but life happens. It doesn't always work that way. Okay, so we do want a 640 or above. but we can get it done with the 580 and the 500. Easy refinancing with an FHA streamline. There are a little bit more guidelines with the FHA and their streamline, but we can do that, and it is pretty simple. There are lower mortgage rates with FHA, and higher DTI ratios are accepted. Who knows what DTI is? I know you do, Todd. Well, debt to income, yes, very much so. It is a debt to income ratio, and that is all your monthly payments, student loans, car payments, credit card payments, mortgage, divided by your monthly income, and it gives us a ratio. And the ratios for the FHA, the ratio limits are higher for the FHA. So that's very, very beneficial as well. Now you can choose between a 15 or 30-year fixed rate or adjustable rate term. We aren't in an adjustable rate term market, so we don't really look into those unless someone's asking about it. But right now we do a lot of mostly fixed rate. That's where the better deals are. So down payment assistance programs or grants are accepted with FHA. And then the seller can pay up to 6% closing cost. That is huge, especially in the market we're in right now, because it is a buyer's market. Todd can go to bat for you and get them to pay up to 6% of the purchase amount for you. So conventional loan.
Oh, could I say something about that real quick?
Sure, absolutely.
Because I just went through a recent FHA loan just like that. So we were looking at was a condo for $200,000, and she wanted to put it in offer, but she was kind of tight on cash for her down payment and for her closing costs. And so it's 200. So I said, well, I think they could probably go to 190, but what we can do is we cannot give them 200,000 and then ask for 10,000 back as seller concessions. So your loan's actually for 200,000, but that $10,000 they give back to you for your closing costs. It'll cover your closing costs. If most of them, you can also use that money to buy down your interest rate. You can actually buy down your interest rate, which is pretty crazy. And if you ask for 20,000 back, you're going to have a really low interest rate in money to cover the. Did I get all that right, Blake?
Yes, absolutely. Yeah, you nailed it right on the head with that. You can use some of that 6% to buy that interest rate down. Absolutely. Which is, again, beneficial in this market. So that's a really good thing about the FHA loans. And conventional loans are also a great program. A conventional loan is a home buyer's loan that is not offered or secured by a government entity. It is available through or guaranteed by a private lender or the two government-sponsored enterprises, Fannie Mae and Freddie Mac. So FHA versus conventional. So minimum down payment on an FHA, like most of you know, is 3.5%. And on a conventional, it is 3%. Minimum credit score for an FHA is 580 and conventional is 620. Keep in mind that those are rock bottom scores. The higher your credit score is, the better your interest rate is going to be. Always remember that when you're thinking about your credit. And the lower your interest rate, the more affordable your loan is. And so we want to get you the best rates possible out there. So max debt to income ratio on an FHA is 55% and 46% on a conventional. The loan limit for 2022 for an FHA is $420,000 and $680,000. On a conventional for 2022 is 647,200. Let's see, the income limits for an FHA is $97,400 with DPA, and then conventional is $76,480 with DPA. Now, keep in mind, these are with the down payment assistance programs. The government or Fannie Mae and Freddie Mac will never put a limit on how much you make. There'll never be a ceiling on how much you make to get qualified for these. The more you make, the better it is for them, because they're lending you money and they want to get paid back. So these are with the down payment assistance programs, and these are in Dallas County. So these will also vary per county, just like we said earlier. It is dependent on your area. Minimum.
Yeah. Oh, didn't they just raise the loan limit for conventional?
Absolutely. They sure did. So we actually just heard this morning we can start using that for loans that are closing in January. The new conventional limit for 2023 is 726,000. So, which is really huge. Anything above that is considered a jumbo loan, and it's got some different guidelines for that. So, you know, in that 720, 726 range, we're still in conventional guidelines, which helps, and conventional pricing, which is tremendous for that. So minimum out-of-pocket contribution for an FHA is 3.5%, and for a conventional is 3%. And those are your down payments. And those can be gift funds, grants, like we talked about, or the forgivable second mortgage. The banks want you to have a little bit of skin in the game. They want to know you're invested in it. So what you can and can't use for down payment and closing costs? Checking and savings account. We will need financial statements for all of these. Like we said earlier, 2 months of bank statements. It's either checking or savings account. That's what a lot of people use for this. Now we can also use 401k or retirement accounts. We will need 2 month statements for those, and the terms of withdrawal will be required. On like a Roth IRA and some 401ks, if you draw money out before you're 65, you have to pay taxes on it. And I think it's Roth IRAs. Some Roth IRAs, you're only able to pull out 60% of what's in there if you're younger than 65. So there are some different terms that we need to make sure we stay within for those. You can have gifts from family members. We will need financial statements from the donor for that. So if mom and dad want to give you 10, 15,000 for that down payment or closing cost, you can use that. You can also use stocks, bonds, or cash. We will need financial statements on there. Now, where it says cash, you can't come to the closing table with a duffel bag of $25,000 and say, I want to put this towards my loan. It is undocumented. We don't have any statements on that. So we do need to make sure that is in the form of a cashier's check. It cannot be money orders either. Keep that in mind, because you cannot document those. You can take that same duffel bag and go plop it on the counter at Western Union and get a bunch of money orders. So that will not be accepted. We need a cashier's check, and we need to know where the money came from. You cannot use a loan to pay your down payment and closing costs. You can't use a credit card either. That will mess with your DTI, and you can't invest with credit. And banks want to know you're investing with actual liquid funds. And then, of course, undocumented cash, like we talked about. Can't use that duffel bag. Well, buyer's eligibility based off of underwriter review. And this is what underwriters look for. Who knows what an underwriter is? Okay, not a lot of people do. So an underwriter is who reviews the loan after I structure it and my processor puts everything in order. We hand it to the underwriter, and the underwriter goes and checks every little thing. And this is what they look at. They look at your ability to repay the loan. And they do that through employment verification, your total income and your monthly debts, and your proposed monthly payment. And that all factors into the DTI. Number two, they look at your willingness to repay the loan. They'll look at your credit report. They'll look at your payment history of previous loans, your rent, your bills, etc. And what is the property going to be used for? Are you buying the property because your family is expanding? Are you buying the house next door so you can move mom and dad next to you? Are you buying a house down in Waco because your son or daughter is going to Baylor? Or, is this going to be a beach house, a lake house? Is it going to be an investment property? All those factors go into your willingness to repay the loan. Of course, if you're going to live there, you're more willing to repay the loan because you need a place to live. So the last thing they look at is the collateral. Is the property eligible for the loan? And the appraisal will determine the value. If we get you into contract on a $450,000 home and the appraisal comes back at $350,000, the underwriter is going to say, well, hold on a second, there's an issue, let's figure this out. So they're gonna call me, and we're gonna get a hold of that appraiser and see what we can do about that. But we need to make sure that the property is the value that we agreed on in that contract. All right, let's answer some questions.
Hey,
Yeah.
geez, man, you that was nonstop talking for like 10 minutes.
Dude, I love, me, I love this stuff. I just get going.
It was like a talking train, just never ending. I was trying to butt in a few times, but didn't.
I'm sorry.
No, it's all good. 5-minute question and answer. Book a call with me so we can look at your specific situation and answer everything. He was just talking about gift funds. I know it sounds kind of weird, but it's a good time to, if you have an uncle or a sister or mom, just say, hey, do you want to help me with my down payment on the house, and I can pay you back later or one day. It's good to ask family members and things like that.
Absolutely.
It works sometimes, but and besides that, let's see, what do we have?
Well, Aaron asked, what was it that you said to keep your credit from being ran multiple times? So with that, Aaron, you can have up to 5 different lenders pull your credit with your credit only getting dinged once. You can do that within 45 days. So otherwise, you're getting penalized for shopping. You're getting penalized for trying to find the best deal. And that's not fair to you. So when a lender pulls your credit and to review, if of course the inquiry is there, if there is if there's any loss of points on there, sometimes there's not at all. It's only about 4 or 5 points, and you do get those back within 90 days. They do come back. So they're not gone forever. So just keep that in mind. You're not going to get penalized for shopping around.
So reading is fundamental. So I was saying earlier about the deadline. Before we start looking at houses, I'm going to need you to get pre-approved. Sometimes we can go look at them without being pre-approved, but we'll go over that here in a minute. But about reading, I give my clients homework. So when we first get started, I give them all the contracts and ask them, make sure you read through all these because we can go look at a lot of houses. They set a deadline and they'll say all offers are due at 5 o'clock today. And some of the agents won't take any offers after that. Most of them will, but you got to have everything ready. And so they should have already read all the contracts. If they haven't, then I Zoom or I go meet them and explain all the contracts, and we go through it. It's not super complicated once I explain it a few different times while we're looking at houses and things like that. But you're right, reading is fundamental. But sometimes there's a deadline and you got to get through it and get that offer in as soon as you can.
So, speaking on deadlines, once you get under contract, everything is time sensitive to get it done in 30 days. Everything is time sensitive. So you get under contract and I send you initial disclosures, which it is a big packet, and it tells you your rights and it tells you exactly where your loan is at that point in time. So in that, we need you to sign that. There are a couple of documents we need you to sign in there before we can move forward. So that's really, really big. It might seem like we're trying to rush you to get it signed, but you have the chance to back out all the way up until closing. Granted, you'll lose money if you back out midway through, but up until closing, you can say no. But keep in mind through that process, everything is time sensitive. So if Todd or myself ask you for a document or ask you for something, like we need it pretty quick. And Todd and I are usually really good about being on the forefront of things. So, we close on time. Let's see, Darius, the incentive down payment comes from the loan program. I assumed it was from the buyer solely. So I think you're asking about the down payment. So the down payment is specific to the loan program. With the down payment assistance programs that I was talking about, they come from the state or another company, or excuse me, another entity that I work in tandem with, along with the bank. So we get the money from this other entity and we put it towards the purchase of the home, towards your loan. It doesn't necessarily get tied into your loan. And I assumed it was from the buyer solely. So the down payment is from the buyer. But the down payment, like I said earlier, can be from the down payment assistance programs. They can be gift funds. And it can also be that grant. So there are different avenues you can go to get a down payment if you don't, have all the money right there.
Where are we at?
Are there any programs that offer closing assistance too? So anything left over from the down payment assistance goes to the closing as well. Like we said earlier, Anita was getting $14,000, but her down payment was just 10, and she had an extra 4,000 left over. Let's see, I'm not, but my dad is. Could I use his VA loan? The only way you use, he would have to be on the loan. And I need to look up the guidelines on that. That's a really great question. I'm not sure. Like, he would have to live in the house as well. That's how the VA works. As far as co-borrowers not being married, I don't think there are any guidelines on that, but there might be. So you wouldn't be able to use his VA loan unless he's buying the house with you.
Is there a standard DTI ratio or idea of a ratio area to get the better deal?
Absolutely. So we talked about the max DTIs earlier. So the lower the DTI, the lower the debt to income ratio, the less of a risk you are to the banks. So it all flows into like DTI, credit, and income. So if you've got good credit and low DTI, the banks consider you less of a risk. So as far as like an ideal ratio, if you can keep your DTI in the low 40s, you're good to go. There's a lot of room to work with. There are a lot of things we can get done for you if it's in the low 40s. There will be now the thing about DTI also is it factors in your proposed monthly payment. So it's going to also depend on the price of the home you're looking at. A lot of times when I'm telling people what they're qualified for, it's the DTI, and I bring it down just a hair, so there's that wiggle room in there in case anything comes up. So instead of at 55%, I bring it down to about 53, and let's call that the ceiling, just in case, we need to, like Todd said, we need to go negotiate some seller concessions. Well, now we've got that room to put a little bit more in there. So,
Hey, Blake,
but yes,
we're going to need to get through these questions faster. We got a lot of questions. If you guys could book a call with me with your questions, we can get a lot more in depth about these questions and look at your specific situation. But we're gonna answer all the questions. Are you ready for the next one?
yeah.
The incentive down payment comes from the loan program. I assumed it was from the buyer solely.
Yeah, he asked that twice. I answered that one. What's the major significant difference between FHA and conventional? Do the interest rates, taxes differ? So taxes are per county. It doesn't matter what program you're in. The taxes are the taxes, whether it's FHA or conventional. Yes, the interest rates do vary. So FHA interest rates are generally lower than conventional. FHA does have mortgage insurance for the life of the loan. Conventional, it drops off after you own 20% of the house. So there's a little give and take there. Those are the two main differences on that. How is closing cost calculated? Closing cost is your title fees, your origination fees, and your escrow fees. Those are the three main things. Escrows are taxes and insurance. Title is the transference of title, and those fees are set by the state. And origination fees are like your processing and underwriting fees. What are the pros and cons of programs like Divvy?
Yeah, I'm partnered with Divvy.
Yeah, you want to take that one?
Yeah, I'm partnered with Divvy and Home Partners of America. They call them rent to own programs, but they're really rent with the option to buy. So the pros of Divvy would be you can get a house under contract, they buy the house with cash, and then you can basically test drive the house. But what you're doing is you're working on getting your credit good, because Divvy you can get a home for, I think it's 550 credit right now. You're working on your mortgage and things like that, and you're getting ready for an actual loan to buy the house. Your rent isn't all going towards the house. Only 25% of your rent is going towards the house. And besides that, Divvy is really hard to qualify if you have credit cards, car payments, any kind of debt. It's really hard to qualify. Home Partners is a little easier, but Home Partners, they don't take any of your rent and save it for your down payment. But the rent is a little lower, if that makes sense. If you want to give me a call, could definitely answer your questions.
Yeah, it says, do we have to only buy single family, or could we purchase a multifamily? So you can purchase a multifamily. The thing about that, once you get into two or more units, that is an investment property at that point in time, because you will be renting out the other side. Now, with that, it is, you do have to put 20% down. So there are some ways around putting that 20% down, called house hacking. More than happy to go a little bit more in depth on a call with you on that. If you're interested in multifamily, we can talk about that too. But most of what we're talking about today is single family. There are some good deals with multifamily also. Can underwriting approve you and the bank still decline you before closing? If yes, any suggestion to avoid this? So one of the things that the underwriter does, it looks at the bank and or investor that I say we want to go with. And the underwriter looks at their guidelines, looks at Fannie Mae, Freddie Mac, whatever loan program guidelines there are, and looks at the guidelines that the bank has and makes sure that everything is good to go before we get clear to close. So that's part of the underwriter's job, is to make sure that the loan satisfies what the bank is asking for under that program, and make sure that we have all the documents and everything in place so we don't run into that. That's my suggestion is, work with your underwriter. When they ask for something, just get them the document, and that's how we avoid that. That's exactly what an underwriter does. So what is refinancing a mortgage? Okay, real quick, it's paying off the mortgage you're currently on and putting in place another mortgage that is has better rate and terms, or getting you cash out of your equity. More than happy to go more in depth on that on a phone call as well. But yeah, good question. There's a lot of questions this time. I like it. All right, we ready to move on? Let's do it.
Yeah, and on multifamily, I can send you multifamily properties. It's hard to get a good deal on multifamily properties unless you're paying cash. I have a lot of those, but it's just because there's so many investors in the Dallas-Fort Worth area, and they have all these workshops to make it look really easy. Oh yeah, you just go get an FHA loan and buy a 4-unit multifamily. It doesn't work like that. They just want you to pay for their work. Yeah, they want you to pay for their workshop. I've dealt with a lot of people that went through that, and it definitely doesn't work with that. It's a scam. Not getting a pre-approval.
All right. So mistake number 2, not getting a pre-approval. Pillars of a mortgage approval: credit, income, and down payment. So credit, that's the history of you paying your stuff back. Income is exactly what it is, how much money you're making. And down payment, banks want to see that you are willing to invest in the home. And so the more you put down, the more you're willing to invest. Loan pre-qualification. Pre-qualification helps you determine how much you can afford to spend on a home based on these 3 factors. Your credit score, your credit score, what your report says, and total debts, your income, employment history, and income calculation. And I will do that. Number 3, your assets, money used on your down payment and closing costs. Pre-qualification can help you out quite a few ways. It determine what house you qualify for. You might be looking in the $500,000 range, but you're only qualified for $400,000. So you don't want to get in a situation where you're under contract, you put money down, but you're not pre-approved, and working through the pre-qualification process, you find out that you're only approved for $400,000, and now you're losing earnest money. So we need to make sure that you're good to go before then. It will increase your bargaining power when negotiating with a seller. And that goes back to that letter I was talking about early on in the early slides, that when you and Todd find that house, you're ready to put an offer in, I'll send Todd we call it a commitment letter. And it's got the property address on there, your offer, how much you're qualified for, and some details about the loan on that. So it will also estimate your monthly payment and total investment. You need to know how much you're paying each month. We want to make sure it fits your budget, and how much money you're going to be spending total on the home. And of course, it will help me identify the loan product that will fulfill your needs. It'll help me figure out if you need to go FHA or conventional, or maybe you're in a USDA area. All right, some do's and don'ts for the loan pre-qualification. Do call us with any questions you have at any point in time. We will answer the phone. If we are asleep, we will pick it up, see that you called, and we will call you the next morning. Continue living at your current residence. You don't want to move out before you close on a home, because you probably will end up homeless for a week and staying in a hotel, and it's just not a good deal. Continue paying your mortgage or rent. We don't want that to ding your credit. Continue to use your credit as normal. Again, we want your credit score to stay intact. Keep working at your current employer. Now, some people do need to buy a home because they are moving to a certain area because of work. That is factored in from the very beginning. And we will ask for an offer letter and different things there. But stay working. We need to show the banks that you've got that steady income. Keep your same insurance company. They know you. They know what you like. They know what you can afford. They know it fits your budget. If you're fed up with your insurance company, I've got a great insurance agent. He will get you a really, really great deal. Stay current on all existing accounts. Do not fall behind on anything, and expect requests for additional documentation throughout the process. We will ask to refresh pay stubs and bank statements through the process. We always need the two most recent bank statements and pay stubs, and this does take it is a 30-day process. And we will ask for verification of employment, or when maybe we need to explain this with a letter of explanation. So a list of don'ts. Don't make any large purchases. I know that brand new BMW is going to look really nice parked in the driveway of this brand new home, this brand new build home that Todd got you in. But wait till afterwards. That will kill a deal so fast. That ruins your credit, like as soon as you get it for the pre-qualification. Don't change banks or make any large cash deposits. If you change bank accounts and start moving money around, we need to figure out why, and we need to know where it's going, where it came from, and how long it sat in that account. And that's part of the Patriot Act. Part of the Patriot Act is they don't want people laundering money into real estate and helping to fund terrorism. So we need to make sure we know where the money is being moved around. Don't transfer balances. Don't close any credit card accounts. Keep your credit as normal. If you want to close them, wait till after we close on the home. Don't consolidate your debt into one or two credit cards. This will screw with your credit like you wouldn't believe, and it will mess up your DTI, and then you are no longer pre-qualified. Don't apply for new credit or take out new loan or co-sign on a loan, because again, it will affect your credit. And don't ever max out or overcharge your credit card on accounts. Whether you're buying a house or not, you should never do that anyway.
Oh, hey, I was just going to ask. So on your credit cards, you would like to keep them under 30% max limit, right? So if you had $900 max limit on your credit card, you would want to keep it under $300 just for
Absolutely.
your score and everything, right?
Absolutely. Yeah. 30%. That's the golden, that's the golden limit. That's the golden number right there, because if you keep your accounts at zero, if you keep paying them off each month, which you should, but if you keep your accounts at zero, it shows that people aren't willing to lend to you. So banks want to see that other people have given you money and you've paid it back. So don't ever go above that 30%.
Yeah, and I have a, I have 3 credit cards, and I just buy something small on them once
Yeah.
a month and auto pay, and it'll shoot your credit up there.
Auto pay is your biggest friend on those. It really is, because it makes sure that they get paid. Mistake number 3, using your bank. So bank penalties are expensive. Most banks will charge an origination or discount points. And the origination and discount points for banks generally run a little bit more steeper than anybody else. In large banks, you're just one of thousands. To them, you're just a number. You know the teller that you see every time that you go up, you know them by name, but the bank as a whole, and the underwriters and the processors and the loan officers, they don't know you. They deal with a lot of people daily, and a lot of times you're not working out of that same branch that you visit every day that's by your house. So you're just kind of a number to them. Large banks typically have stricter guidelines that will not cater to specific situations outside of their general box. That's one thing that's good about going with a broker like me, is I know my underwriter. And if there's an issue, she calls me and she just asks a question. Hey, this is what I see on this loan. What's going on here? And a lot of times we can get it solved over the phone. Larger banks, you don't have that, because the loan officer might be in this branch, and the underwriter might be over at corporate, and the only time they're ever going to talk to each other or see each other is through email on your loan. Let's see. Larger banks may not offer down payment assistance programs. A lot of times they don't want to go that extra mile for you and get you approved for that. And again, listen, if the state wants to offer you money to buy a home, let's see if we can get it for you. Let's get you pre-approved for that as well.
And yeah, I can back that too. I hate dealing with banks. Like I said, you're usually talking to somebody different every time. The communications, most of the time, pretty bad. It's not like you have a one-on-one relationship with the people. And man, we've been in some bad situations with banks. Just because you've been going to this bank for 30 years doesn't mean they're going to give you a better deal than somebody that just walked in. You know, they're going to look at your credit and your whole situation, and the computer's going to tell you what you get. But communication's key. It really is.
Absolutely.
Through all this. Okay, buying directly from the builder.
Mistake number 4. So
Yes.
the truth about buying straight from a builder, closing cost assistance can be bait for a higher interest rate. A lot of builders out there right now are offering they're trying to throw all sorts of money at you. If they wanted to give you a better deal, they would take it off of the purchase price, but they're throwing it at you as closing cost assistance. A lot of times it's built into other areas. So they might say, hey, we're going to give you $8,000 towards your closing cost. Well, there are other hidden fees and other things in there to kind of balance that out. And a realtor works for you, and a sales agent works for the builder. And think about it this way. Todd is working for you. He's looking to put you in a home. The sales agent for the builder is looking to put bodies in their homes. They're looking to fill homes. So it's a little bit different than, Todd out there every day looking for that perfect home for you and going to bat for you and negotiating for you. The sales agent works for the builder, so they get paid by putting people in the homes. It doesn't matter who goes in that home, they get paid as long as someone goes in that home. And now that might sound a little bit cold, but that's, kind of the way it is with them. I'm not saying they're all bad people, but that's their job,
Okay, so everything that I do for you as a buyer is free. I should have said that earlier, but you will never pay me anything. The seller that's selling the property will pay me. So to have me come with you and negotiate on a brand new house with the builder, it's free. Like, and I'm going to negotiate with their salesman probably, or straight to the builder. And I do know a lot of builders. And sometimes they'll tell you, yeah, you don't need an inspection because it's brand new, this and that. You never know what they're gonna try to pull, especially in the contracts and things like that. So it's always better to have expert advice with you. Especially, you know, all these new DR Horton homes where you just walk in. Whoops, I just broke something. Where you just walk in and they sign you up and then you get the home and you leave. You want a negotiator with you, an expert. Which goes
Yeah,
to
absolutely. And speaking on it, sorry, real quick, speaking onto that, just know that Todd and I, like, we don't get paid until you close on the home. And neither one of us get paid by you. Like, I get paid by the company I work for, and then Todd gets paid by the seller. So knowing that we don't get paid until you close on the home, you know, we're fully invested in getting you exactly what you want and getting you in that home and getting that closed for you.
Yeah, but I mean, especially this year, I've probably told people not to buy that home more than I've told them to buy that home. I have a background as a contractor. I guess I forgot to say that. So when we go to look at a home, I basically do an inspection myself, and I record it on a video and put it on YouTube so they can see it and they can send it to their family members. I do like a nice video, but I also point out the flaws in the house if there are some. So instead of getting it under contract and then hiring an inspector and then feeling, you know, finding out then that you have problems with the house, you can kind of know up front. So it's not like I'm trying to push everybody into buying a house just so I get paid. I definitely push a lot of people away from some houses, and looking out for your best interests.
I will say this, Todd is a very honest guy. He's called me a couple times and said, you know, we're going to go ahead and back out of this deal. So go ahead and, you know, tell your processor to stop. You know, we're not going to put you in a home that isn't going to be good for you. Anyway, go ahead. Sorry, I didn't mean to interrupt.
Oh, it's cool. Cost of skipping a home inspection. It could cost you tens of thousands. So if we went and looked at this house, I don't think you need an inspector, but yeah, it's pretty rough.
Got a nice
Skipping a
breathe,
home inspection, you purchase a house unaware of deal breakers, you lose your negotiating power. So the negotiating power is once the contract's accepted, you have an option period. Let's say it's 6 days. So you have 6 days to back out and not buy the house and still get some, or the money that you know, it's basically a deposit, the earnest money back. So during those 6 days, you get an inspection, and on the inspection report, it say like there's cracks in the walls, a window's broken, this and that. We can negotiate and say, hey, you need to fix that crack, you need to fix that window, or just give us $3,000 back, because you have the chance to back out. We have the negotiating power right there because of the inspection. So some home sellers get an inspection before they put their home on the market, and then they just send you the inspection, and they're saying, okay, you don't need another inspection. You go ahead and get another inspection, so you know, and pay. People fall in love with homes and they don't pay attention to the inspection because they've got like their whole life planned out with this home, and and so sometimes it's really hard to convince people not to buy a home, or that these are huge problems that they're going to have to face in the future. So you got to pay attention to your inspection. I make sure people do that because I don't want them calling me later saying, hey, we didn't know about this, we didn't know about that, we went over that, and I told you all about it. You risk inheriting non-structural safety issues such as mold, radon, and carbon monoxide. And you miss having a forecast of future repair costs. That's what I was saying.
Hey, real quick, what is radon?
Radon is a gas that radon gas is the #1 cause of lung cancer in the United States besides smoking cigarettes. So 21,000 people, I think around 21,000 people die from radon being in their homes or in their workplace every year. It's a gas form when there's a crack in the foundation underneath your house, the dirt forms radon gas and it goes up through the floors. And so you could be breathing that all day, and not know anything about it. So that's a very important thing. And people say, oh, I don't care about the foundation, I just want this house. Those are things that can happen if you leave your foundation broken and try to just go ahead and live there. So that's a big deal. You're oblivious to illegal no-code additions and remodels. An inspector a lot of the time won't catch that. That's if, say, they made the back porch into another bedroom or their garage. You have to get a permit from the city to do that legally. If you do that and sell someone the house and they catch it when they're doing the survey and title because there's more square feet added onto it, you can get fined, they can get fined. There's a lot of things like that an inspector won't catch. Sometimes they will, a lot of the time. Choosing the wrong realtor. I think that's kind of common sense. Drop the ball on communication. A big part of it is, my nephew, he just started as a real estate agent. This is his first sell. It's nice to help people out like that, but mistakes happen, and that's part of life. That's part of the job, and you learn from those mistakes, and that's how you get experienced. And when those problems come up, you know how to fix them. That's a big part of communication and making sure you have the team that knows what they're doing, that are experts on everything. Like as a side gig, does real estate as a side gig, that means they can't make it as a full-time real estate agent. Has their own agenda. A lot of agents don't get very involved. They just kind of show you the house. Do you like this house? Okay, sign the paperwork. I get really involved. I get up at 7 o'clock and I work until I go to bed at 10 o'clock. And then I'll answer the phone anytime. We've stayed up doing contracts until the early morning the next day. I just got a review about that. We did a contract and we were working all this stuff till 1 o'clock in the morning, me and Blake and my client. We're just dedicated. We're hungry and we're ready to go for sure. Runs late, not a great negotiator, lacks marketing skills, acts dishonestly or unethically, is overeager to please, acts as a messenger rather than guiding you through the process. That's kind of what I've already said. Just ask a lot of questions, look them up, see how many real or reviews they have on different sites and things like that, or just let me do it. So we'll go over the crime rates around Dallas. The reason it's so high right here, that's the airport. So that'll be part of choosing a neighborhood. This is a soil map. We'll actually study the soils and see what kind of chance your house has of getting foundation problems. Niche is a really good site, NICHE, for looking up everything about the city and the area, the schools, all those things. I really like that site. It's usually pretty accurate. And I just wanted to say again, I'm putting my link in the chat. If you guys want to sign up, here, I'll put the chat. Well, I guess I can't put the chat over there. If you guys want to sign up for a short one-on-one phone call, we can help you get going smoothly. I just realized if I put HTTPS, you can actually click on it, and you guys should be able to too. I wasn't putting that in there earlier. But yeah, let's talk about it. We can text about it if you don't want to call. We can email about it, but let's get you started. You know, it's never too early to get started. It really isn't. And just get some advice. So how are you guys feeling now? I hope you guys are excited, confident, informed. Let me know in the chat how you guys are feeling, or if there's something we could have done better. Let's just I'd like some feedback on everything. Someone turned on closed captioning. Okay, cool. Yeah, so let me know if you guys have any more questions, how you're feeling. Here's our question time. Do we have a lot of questions lined up?
Refinance says, why not close an account that's paid in full? Probably referencing the credit cards. When you close a credit card account, it negatively affects your score for whatever reason. So if you're going to do that, wait till after you close. Absolutely wait till after you close. Let's see, Darius, can you all share the slides from this via email?
Yeah, I answered that. So I'll upload this webinar to YouTube and, send you the link if you want it. Just from the number I've been texting you guys, just tell me you want the link to the YouTube video. And
I have a question in reference to the credit card closing of an account. How much would it affect you if you closed the account and it was paid in full?
That's generally, like, everything with credit is situation specific. So it would depend on what we call, so each credit card or each like mortgage, each car payment, student loan, whatever, it has its own trade line. So it would depend on what's on the trade line for that credit card. Are there any late payments? Has it been paid in full? How long has it been on there? If you've had a credit card for 10 years, you want to keep that card on there because it has credit history. So the credit history is really what builds your credit score. So if you're closing a card that has like 10 years credit history on there, you're pulling that off, and that can drop your score down. But
okay,
again,
what if I only had the card open for like 2 months, and I closed it because I wasn't satisfied with the way they were conducting business. So it's like I never charged anything on the card, but when I first got the card, I was charged an item that I actually paid cash for, and it took me like 2 months to dispute it in order for them to make the corrections.
Okay,
so I closed it within 2 months.
Okay. So you went through a credit agency and disputed it?
No, I disputed it with the actual vendor.
Okay. All right. So on that specific trade line, it's going to show as a dispute. Disputes aren't always negative on your credit score, and it will show that that account is closed. So if you don't have a long history with it,
No.
if you don't, and if it is disputed because of any sort of nefarious actions that they took, then it shouldn't be that big of a deal, especially if you didn't run the credit card up a whole lot.
No,
Which
I
it
didn't
does,
use it. I didn't use it at all, period.
yeah, I was saying, it doesn't sound like you did. So in that specific situation, I don't think it's going to hurt you per se. And when I was saying don't close credit card accounts, that's like, we are in contract. You've put down earnest money. So we need to make sure that your credit score stays exactly what it is when we pre-qualified for you. So because you've done that prior to getting pre-qualified and everything, I'll have a chance to review your credit, see how that trade line is affecting your credit score. And if we need to do anything, delete the trade line, delete the dispute or whatever, we can address that before we get it under contract. So that is one of the things that I do when I'm reviewing credit is see if there's anything, fairly simple we can do to boost your credit and get you the best rate possible on that. But it doesn't sound like that one's going to affect you that much at all.
Okay, thank you.
Absolutely.
Here's,
Let's see.